Hey guys, it's your favorite realtor, Thomas Paulauskas. Welcome back to another episode of what's going on in the market now. So last week, if you guys didn't watch that video, go back to last week and watch the video as to what could possibly happen in the market that would cause the market to crash or cause a deflation in the market values of real estate. Today, we're gonna look at what could potentially hedge against what we talked about last week and continue a strong, inflated and appreciating real estate market. So let's get right into it. All right, guys, as you can see behind me, the first one is the skyrocketing lumber and material costs for building a home. Lumber itself has gone up over 33% in the last few months, the last year from where it was. And that is causing it to be more expensive for builders to build homes. Guess who assumes that cost? The consumer. So that's also going to keep up values for new built homes. The next thing on here is quantitative easing, or to make it easier, inflation. The government is printing so much money so quickly that actually the cost for goods and services is going to increase because the value of every dollar is going to be less. Okay, so now that the value of every dollar is less, the prices for everything goes up because it takes more of those dollars to buy that same asset. All right, guys, and number 3 is the historic low inventory. We have the lowest inventory recorded in history in the nation. Actually, we're behind almost 2 million units of housing, of homes, of housing for people to live in. We have 2 million units that are needed to supply the current American people for them to have housing for themselves, correct? So historic low inventory, it's the lowest it's ever been, and that the lower the inventory, obviously the higher the demand, because more and more people are going to be fighting over one house. That would cause the price to appreciate as well or go up. Number 4 is market bottom interest rates. We're still, even though they have ticked up a bit, we're still at historically low interest rates for a mortgage. We're at 3.25%, and some people could get them even less right now. That is insane, especially in the 1980s when things were at 16%. So if rates were to go up, yes, then prices probably would come down. Or if rates stayed where they're at or went down a little bit, then we would see prices go up in turn. Number 5 is the removal of eviction moratorium. So that's a great question. Why would the removal of the eviction moratorium cause prices to go up? That means people have to get out, they're getting evicted, that could cause more inventory, so on and so forth. Right. So what happens is those people that get evicted or have to move out of these rental homes are then going to become more demand for more rental properties. Those homes might turn into more inventory, and as rental prices increase, the housing market will also increase because investors are willing to pay more money for a home if they can get more rental. The more renters there are out there, the higher the demand, the more rental costs. So the more income an investor can make on that one property. Okay, you guys, the last on my list today is the economy reopening. This could cause prices to go up or to be stabilized as well. We saw in the last year lockdowns, we saw people losing jobs, we saw people being laid off, and in turn there was some assistance to the government for that. Now as things open back up and potentially the unemployment rate goes down, that means more people have more spending money, they have jobs, they're moving from one place to another for their job. So as we get more jobs flowing back into the economy, people get back to work, that could cause the prices to stay inflated or the prices to continue to rise or even stabilize, guys. So these are the 6 things that I found that could cause the market to stay stable or even increase in value, even with the 7 things we talked about last week about what could cause a crash in the market. You guys, I'd like to hear your feedback. What do you think is going to happen in the next year, 2 years in the real estate market? What have you seen out there that I didn't mention today? Please give me your feedback in the comments below, and I'll see you in the next video.